counterattack it with another avenue. So they don't just burn all their ships at once. When the company starts picking up is when they start
removing all that other hassle.
Yeah, now this one has become too hassle. So also I'm starting to think now also as well. It can be it's a good avenue if someone is to take maybe a risk in the markets and become a full-time trader. Mm-hmm. You cannot start easy without first
Welcome
2 years you're having
show.
support somewhere.
This show is brought to you by Pepperstone. Pepperstone is an award-winning online global Forex and CFD broker. It offers unparalleled service, exceptional pricing, and fast execution speed. Pepperstone gives you access into the global markets with more trading opportunities, first-class customer service, and peace of mind. Withdrawals are quick, and for those in Kenya, M-Pesa is enabled. Pepperstone Markets is regulated by the Capital Markets Authority. To open an account with Pepperstone, you can click the links on the descriptions below. Hello traders, welcome back to another episode of the Traders Show. So this is episode 24, 25.
Hey, 26, 7, okay.
6, okay. I'm behind by 2.
27 actually, yeah.
Okay,
27.
next it will be 28. Anyway, 27th episode. So in this episode, you're going to kind of consolidate what we've been talking about in a couple of episodes, but now we'll put it down into one episode. So the topic of the day is why most traders never succeed. Or rather, why do 90% of the people lose in the markets? So there are very many reasons. If you've been in the markets for long enough, you'll understand some of the reasons why many people lose. And we'll try and talk about some of these reasons, how you can navigate some of these reasons. Some of them, you can't really run away from them. It's just a matter of time before they catch up with you. And it's about how you handle them after they've gotten up with you that's more important than actually them catching up with you. So I think that's the main thing that we'll be talking about. There are a couple of reasons. We can branch them out into different reasons. 1, there's the learning curve. 2, there's the psychology. 3, there's risk and money management. 4, there's the system part. So there are different parts of why many people don't make it in trading. But we'll try and talk about a specific topic, narrow down into it, and then move to the other reasons. So my name's Akian. Alongside me, I'm joined by 2 of my colleagues. I'll allow them to introduce themselves, and then we'll jump on into the topic.
Hey, what's up guys? Hope everyone is well. Wonderful week. Welcome back to our show. So as Kenna said, we'll talk about why most traders never succeed and what you can do to succeed. Well, if you do the opposite of why traders don't succeed, you'll succeed. Yep. So just go in the opposite. It's just like life. It's like a verse I was reading yesterday, Matthew. The one was telling you, Ken, Jesus teaching. He said, you take the narrow road, that's the one that few people take, and it's the one that leads to success. If you take the wide road, the wide gate, there's no path to success. So why most traders never succeed? We'll talk about it. This week markets have been awesome. Choppy. Let's say awesome. Choppy, erratic. Okay. Choppy, erratic. Hey. Hard trades running well. Then all of a sudden, we turned a bit, and the dollar has been rising, breaking key levels. So, but that's how the week has gone. I have a trade that's still running profitably. Another one was taken out. But yeah, so that's my week, and yeah.
Greetings, people. My name is Taras Lawi. It's another episode, so I'm glad to join you guys to share the experience I've had in terms of why traders fail. So, of course, I think I know why I failed. So before. I will share that, yeah, because you have to fail for you to wake up and look for something that will work now. So it's a very sensitive topic because I know most of the people, or most of the audience, like 99% of the people, are still struggling in the learning curve. So it's a very sensitive topic. It will relate to most people, and I think it's if you pick the like the good things of what we'll say don't do, you think you'll easily change your trajectory in trading. So trading is a difficult game. So it's difficult. So it's the main reason why people fail. Like it has a lot of parameters. And if one parameter doesn't work, the whole system won't work. So the fact that it's very, very wide, it's time intensive. You really need to put a lot of time into it. Mm-hmm. I think that is just the framework of how we will go about it. Right. As Ken said, the learning curve is difficult. Being psychology is so difficult, yeah, because even for pros, the game is still very, very hard. Yep. So we've seen pros fail at the game. Mm-hmm. So it's not an easy game, basically. So we'll look at reasons why beginners fail, why pros fail, why intermediates fail, and why only 1% make it the game.
Succeed.
Yeah. So can you can start us off? Oh, for me, my week. What? Hey, like
a hito.
For 2 weeks, markets have been
Tough.
giving me profits and taking them. Like most of my trades have been working, but still not working 100%. So it's a psychological test, but you have to still remain very, very solid in your mental state. So you take your losses home and learn from them.
You've learned.
Yeah. I've lost a couple of trades this week, which were giving me more than 1.5% returns. So,
But you're fine.
Yeah. Mentally strong.
Okay.
Yeah.
So you're winning.
I'm winning psychologically.
Right.
Yeah.
Yep. So like my friends have said, on the same trading side, I don't think I've had an easier week also. So I had a couple of setups. None of them worked for me, so I didn't have any winning trade actually. Ended up down a bit, but that's normal, like Lavi said. So I think once you're trading, it's normal to have the ups and downs, the losing weeks and the winning weeks. It's the losing that makes up the winning, so and the winning makes up the losing. You need to lean on one side. You can't be on the on the balance. So it was a losing week for me, but looking forward to another profitable week, probably next week or the week after that. Let's see how markets will fare. Let's see how trends will develop, and then we can know how to position ourselves. So to start off, I think for me, the most important thing, I think I'll start off with the learning curve. I think many people don't really get to reach on the other side of the world. Just like many people drop out of medicine school, many people drop out of engineering school.
Like
the same happens in trading. Like many people start off, and in the first 1-2 years, if it's not working, they just like, I can't go on. Like I just have to stop here. I'm not making any progress. I'm not learning. And this is because they measure their progress, one, based on how much money they make. When you're starting out trading, obviously the most attractive thing for you is the financial freedom that comes with it.
Yeah.
But when you start out, you don't really understand. I think you're naive to some point on what it really takes for you to make money in the markets. So you come in with this idea that, I'll learn probably these technicals and then I'll be perfectly good, or I'll learn this strategy from this person and then I'll just start trading and it will work. Unfortunately, that's not how it goes. So the learning curve is a bit steep, and for the first 2-3 years, it could just be a straight line, just like many exponential curves. So you're putting in a lot of time, but you can't see the reward.
Actually, I think it's the opposite. It's a downward curve.
J-curve.
first.
Exactly. You can even start with, that's a perfect analogy by the way. You start with
J-curve.
losing, then you come to flat, and then you start winning.
Yeah.
So that's true, because when you start out in trading, I can assure you, I've met very few people who, I don't think I've even met one person who never blew an account. I've not met any human being who started trading and started winning immediately. Like these people went through periods of losing.
Yeah.
And some people, I think the average is 3 to 5 years of losing, like consistently losing, just losing money. Money is leaving your pockets. You're depositing and you're never withdrawing. If you can be able to deal without trauma, you can be able to get on the other side of the land. But just like many people never go to the promised land, the same is true for trading.
1%.
Many people never get to the promised land because they just give up too early, man. You give up too early, and you don't put in the right time expectations, and you just throw in the towel, and that's it. Your journey ends there.
So that's both in trading and in life, basically.
Yeah, but trading is a bit more psychological. I think I was actually listening to Scott Gallo, and he was saying a big part of success, whether in life, in anything, will come from you being very, very resilient about your failures. So,
Resilient.
Yeah. A big part of success is basically how you deal with failures, because they'll be there. So the people who've succeeded are the ones who've been resilient despite the failures. You get? So I think also, it could apply in life. I've not lived very long for me to conclude that, but at least I've traded long enough to conclude that without resilience, it's an impossible task. Yep.
So that's your first point.
Yep.
My point, it's a simple one, but people really negate it and they never pay attention to it. Most people don't have a plan. They hope, they dream, they fantasize, they think money is going to come without a plan. Even in gambling, the professional gamblers have a plan. The people, like, they can Ken was a professional. He was heading there.
I was trying like
Ken was trying. His wasn't guesswork. Man invested in Ken because I saw he had a plan. It's better to have a plan.
I was making cash on this thing.
Hey, you analyze the odds, you calculate, you put those things. I don't know what you guys call them, but anyway, I've never taken a gamble in my life. Maybe gambling with life itself, but not with money, evil like Ken. So people don't have a plan. It's like football. Imagine Manu wamekam kucheza na Manchester without a plan. Manchester City, yeah, without a plan.
Are you just trying to attack Manu because Manu was whooped?
Manu is my team, so
Manu was whooped last weekend.
They were whooped.
Man City.
They're playing with Man City.
Yeah,
okay. Good example. That was even guesswork. Sikujua alicheza na Man City. Who won? Man City. Now imagine, a plan won't always work. Kaivo. These guys came with a plan how they're going to play. They normally know when they're going to substitute someone who wants a game. Later on, what to change. Their formations. You know, they normally play FIFA, you put formation. Exactly. So it happens in real life as well. So people have a plan. You come with a plan, then you execute the plan. And most of the time, the plan might not work as you've planned it, which is fine. At least you had a plan. You can go see, okay, there was something wrong with this plan. Now imagine someone who didn't have a plan. And there's this, just before you add, there's this quote, the one was telling you, Ken, a person with no plan is never lost.
Yeah.
Like ako tu
You're not lost.
You're just there. You can't get lost. You don't have a plan. How will you get lost? You're just ignorance is bliss, living your life. What are you going to add? Sorry.
Because to add on, after having that plan, you should have a contingency plan again.
Backup
plan. Plan size per work. What is the next plan?
That's a risk management plan.
Exactly. So basically, because that's why, as Ken is saying, most people give up too early because they don't have now that contingency plan.
Kwanza lazima, there's a high chance it will fail.
They believe in burning all the ships. One plan.
So
one
after
plan.
this plan has failed, most people don't have a second plan and a third plan and a fourth plan.
That's
and
true.
in trading, you can even have 15 plans. Yani, because let's just say you as Ken said, 3 to 5 years. In those 3 to 5 years, let's say you'll have, in 1 year, you'll have, 2 plans. Zote zikose kuwork. By the 5th year, utakuwa na 10 plans, which all didn't work. So you really, really need to have a plan that, if all this doesn't work, what should I do? What will I do to make it at least work? After if you get the 100th plan, your focus is, I want to make 101 plan work. 102 plan work.
True.
Yes, exactly. And that's why Ken is saying most traders give up. You had a plan, you failed,
didn't work,
go to the next thing. Trading tena umeiacha. So you're giving up too fast. I think I'll also join Ken in that point. Because most people don't even give up after 5 years of trading.
5 ni more.
Most people give up in less than 1 year of trading.
Yeah, true.
You've learned something, you've learned a strategy. Let's say you've come to FAB, you've learned how to trade, but learning from us won't make you successful. I can assure you.
Yeah.
It will just give you a framework of how the markets work.
We'll give you a plan.
Yes. But it will never make you successful.
True.
Only you yourself can make you successful in the market. So the moment that msee anaona, I invested in FAB, in my knowledge,
it didn't
work. So that loss already frame as a loss.
It worked, but it didn't work like they expected.
Yeah, it didn't work like they expected.
Exactly.
So they didn't get, because as you're saying, they have actually a wrong
a what?
A plan that is crooked.
Okay.
Someone wants, because some people have a plan. They want to make 50%. That's a plan, but it can't work in 1 month. So the fact that your plan didn't work according to after even investing in knowledge.
Yeah.
I invested 50,000 in learning.
Yeah.
I put another 50,000 in the account.
100. It's like the people who came to UK, they lost how much? 6 million.
Yeah.
Yeah. So
before someone even develops, afikio patisa could develop risk system, asha give up kwa strategy. So the fact that the learning curve is too long, msana give up hapo kwa the first 3 months, 5 months, 4 months. And also it's because of demands of life. You see. As Ken is saying, you need to have a plan that you've burnt all the ships.
Yeah.
Like there's no other extra plan apart from the trading industry. So your focus is, if I want to be successful in trading, I only have to have trading as my option.
Yep.
So the moment life doesn't allow you to do that because life is also brutal. Life is duty because Ken has this Equisoft on him. See, Ken has bills. Ken has an office to pay for. He has to eat, transport. So you can't do all that when you're always losing in the markets. So you choose to like get a softer spot, a softer landing place.
With your point, this guy says now he comes and sort of tries and gives a different perspective. You know, they normally say, like, kill everything, jump into one chip, kufa nayo. So he tries and defies it by looking at data and looking at history of successful CEOs, entrepreneurs. So he came and saw, we tend to believe, it's a notion we have, we tend to believe that most people who have succeeded took a very high risk and kept, as in, waka quit job, I'm just doing this one thing, I'm building this company. But in retrospect, in looking, understanding what they did, these entrepreneurs are very risk averse.
Most successful
are very risk averse, very.
But they look for a big reward.
What they normally do by being risk averse, they normally say it's almost like there's another psychologist who looked, either psychologist or economist, looked at in terms of market. In order for you to minimize risk, you take a diversified portfolio of bets. Now he came to real life and said that it's also the same. So most people, these guys give examples. Someone like Phil Knight, he was given as an example the way, yes, he started Nike, he's worth now $70 billion. At first he wasn't very risky. Remember, this guy never used to work at the company full time. So he had a
part-time job.
He was taking care of his other side. So what you're talking about, finances, bills. So they normally do that, but they said they're doing something. They normally counterattack it with another avenue. So they don't just burn all their ships at once. When the company starts picking up is when they start
removing all that other hassle.
Now this one has become too hassle. So also I'm starting to think now also as well, it can be, it's a good avenue if someone is to take maybe a risk in the markets and become a full-time trader. You cannot start easy without first 2 years you're having support somewhere else.
But I think you guys are conflicting on the point.
She's okay.
Yeah, so I think Lawi's point is not really conflicting, but not really getting each other.
Not the same.
Exactly. Your point is true. Like that's how we started also. We never started saying
of course
from trading. True. But the point is, I think what Lawi is trying to say is, you must be sure and certain that trading is what will make you wealthy. There's no way you're closing this door. Like there's no
in the long run.
Exactly. You're closing this door.
No matter what.
Like this is the
if you lose money, you'll go hustle somewhere else and then come back. Okay, I get. Yeah.
But the minute ukona sasa 3 things and then you're saying ile nitapiki ya kwanza ndo ndafuata
gambling.
Now that one it's quite hard for you to
bet.
To get to the other side. I think
so it's basically true.
So what you're saying is, as you start out, have a hedge, which is what he has said.
Exactly my point. My point was this: like people fail because of people quit in trading, or people choose to leave trading because of life pressures. You see, so una choose to, because the topic is why people fail, why people don't have a career. So life imekam na pressures, and you choose to take ile pressure iko na some security. If you can just earn some 50k somewhere, hiyo ni better than kukuja huku every day in the market having stress. If you can still have that trading idea and still hustle, because like nowadays there's so many ways of making money. You don't have to just, let's say, be in a 24-hour job to
24-hour job
and like a 9 to 5 to make money. You see?
I get it. Yeah,
you can be a creative. You can make money.
Metaverse.
Like you can easily make money. If you know where to find the money.
True.
But as Ken is saying, like you need to know I'm working for my trading. No. Like this is just to support me as I work for my trading.
Yep.
So see ati tena ingine ndio imekuwa tena the best priority.
Because even like that was the analogy. Like I'm doing this work because Nike can't pay me.
Exactly.
Yeah, for sure.
So
and he has no one to support him.
Exactly. So I'll do this work to sustain Nike. For Nike to survive, I have to work outside.
Yeah.
You get? Yeah, but it was not like
Johnson.
It was not like asa acha Nike ni yeke kando kwanza I work then no. If you do that, you're dead.
And the founders eat last, yeah? See, this guy also, he was paying Kina Johnson. Johnson was working full time, yeah.
Leaders eat last.
Anyway, that's on another point. So what further point do you have, Ras?
Apart from that,
Yeah.
now it comes now to, I think I can now go to, after the learning curve, I think I can go to the system. It also, learning is just a part of learning. Because me, I think actually, I have 5 years experience in markets, and I learned for the last 4 years. The last 1 year I've been using it to make my system. So you see, I still have another three more years to still perfect on this system. Now after inshallah hizi vitu zote, I've made mistakes, I've used all the indicators in the world.
Now you filtered out.
I filtered out. Now I'm trying now to form a system. That is now another challenge. Most people don't get to that point where now they get to formulate a system. And that's another challenge. Getting a system that works is difficult. Learning to trade singumu sana. But getting a strategy that a system that will make money in the long run
consistently
is very difficult. You need to backtest so much. You need to come and also after backtesting come and put your money. Psychology changes 100%. So the system development part is also, I think, where most people don't get to. So someone wants to trade but haja develop the system. So the lack of a trading system is another reason why most traders, let's say after 2 years, 3 years now you decide.
And part of it is because it's boring.
Boring? What do you mean by boring?
You backtest. People want action.
Yeah, people want action.
People want
exactly. People don't even do that. People don't do that.
Evil. Good trading is boring. You sit down, angalia tu history, how it's performing, you're backtesting. You're not trading. You're not making money. And this person said this way.
Most of us traders tumefanya hiyo job ya backtesting 3-4 years after blowing accounts.
After blowing accounts.
So unakuja unaangalia what was the main reason you blow accounts. Kumbe ni system sina. Now you come and decide and humble yourself and even give yourself a 3-4 months break from markets just to go and
work on the system. Yeah, true.
The fact that most people don't backtest, most people don't create a system. You learn something, put money and kick it off. Now let's see what markets has in store for us. So the fact that we just go all into the markets without having markets are random. And the moment you don't have a system, you'll always have random results. And sometimes you make so much money, sometimes you blow up, sometimes you hata huko kwa market tena. Everything is just random until if you get a point you may give up on everything, even the trading. Asa on the action, you decided, hey, let me now give myself a break, take this back tester.
People never come down to that.
Hey, blow tuna kazi. But if I blow today, my point is, hey, where will I get the next money to trade? But which is another toxic behavior. After blowing an account, you go back and look at why did I blow? Not getting back to action and thinking. And that is one thing I come to realize now. I interact with most traders, because most traders come to the office, they told me I blew. They never look at why they blew. They always say, I know my mistake.
It's hard to look at your mistakes.
Nasema anajua kitu nimefanya vibaya. Exactly. But literally haujui na kama unajua hiyo mistakes tumesema ziko na cousins and brothers and sisters and aunties. So you'll think you know the cousin. The next time inakama hasa na the brother,
sister-in-law,
the sister-in-law, the kid. So mistakes, you always have to know that you don't know why you're failing until you go back to the drawing board. Ukisemanga tu ati mimi njoo mimi niliblow account because of position sizing. Next time itakuwa tena si position sizing, tuna psychology. So it's very difficult. The fact that there's so much in creating that system is also, it elongates the journey way longer. Asa I'm in my third journey. I develop a system for 1 year. Ukisha develop system, no one amekuwa show system ina work. You have to go and test it in the markets for at least 2 years. When you system you test at least for 2 years, you may make money. Now you can go exponential now. Get more capital. You see?
Yeah.
And it's a slow process. Trading is a slow process.
But now I'm also proud of the students we teach.
Yeah.
Because the students, I'm done with finished them the last class, like the ones I finished this week, Lisa and John. And most people, Jubai, those guys, Edwin. So my last class I normally tackle journaling and backtesting. I tackle the two of them. So I show them how they can backtest and use a journal to get data, whatever, when they're just noting down. So at the end of it, most of them come out and they agree how important it is to go back test.
True.
And that's how Jobai concluded that his system wasn't working before. And backtesting will give you the data we're normally looking for, which is more important than the system itself. You're looking at the hit rate, which we are saying right now. Hit rate is very important. POF, pattern occurrence frequency. You're looking at risk reward that's favorable to your system, such stuff. So at the end of it, when I finish teaching them, they're like, this is important. So they know the importance of it. I don't think any one of them will go now trade.
I think that point is also lack of a good education.
Of course.
Most people, like you said, say umewafunza, right? Umewashow this is an easier path to success in trading. Most people who don't go into a mentor, hawatapata hiyo like kuambiwa go back test. Watatu move ile ya kuenda ku trade every day. Kiblo ni kutafuta tena pesa. Ajui anafaa ku back test. So lack of the right knowledge pia is the point you're trying to put.
For sure.
Msa amekuja tu kwa markets, hana good guidance, ashaanza ku trade. Most likely you'll go down. Yeah.
For sure. Ken?
I think another main reason why many people lose, and if I just go back to like, some of these things I'm relying on experience, some of them I'm relying on knowledge, some of them I'm relying on observation. I think many people can't just pay for the transactional costs that it takes to trade. Like when you start a trade, when you just execute a trade, you start from a losing point. The fact that you're not even making money to cover for these costs mean that you lose, definitely. Yeah. And that's why it's also very, very important for you to look for a broker who offers very, very low spreads, very, very low transactional costs. So that when you start trading, you don't have to, because there are brokers who offer very high spreads.
For sure.
They'll widen the spreads when the news come out.
Like crazy, and people don't pay attention.
Exactly. Those are transactional costs which are, like, Gitosha alikuwa anatuambia swap yake ni $300. That's 30,000 shillings. Exactly.
You ni overnight. Overnight charge.
You're paying 30,000 shillings just to hold a trade.
Yeah.
You can imagine if you're not making money. And that's why, like, for us, like, we've been using Pepperstone, and we know, like, they offer very low spreads, very, very low commissions. And that is really, really helpful, especially when you're starting out as a trader.
Yeah, it's important.
Starting out, you don't even know what you're doing.
You're
not even
is.
thinking about the spreads. You're just trading huko ndani. Najipata umefanya vitu zingine which are not very, very wise. So it's also very important for you to think about the transactional costs and do good research to come back to a good trader, a good broker, who will offer you very, very low transactional costs. You need to be able to keep on trading.
And also the
account.
Commissions.
Yeah. Commissions.
Because trading actually, as Ken is saying.
So which broker is this that offers low?
Pepperstone Markets Kenya offers very low spreads. You can open an account with them. We'll give you the links in the description for those who are on YouTube and the other platforms. I think on Spotify, we'll also drop you a link so that you can open an account. Check them out, try them out, and then you'll tell us your experience.
Yeah. So I was saying, in trading, the transactional costs are, especially for now as you develop into having a bigger account, the costs are very, very high. So you really need to get to a broker who can even be lenient on you. A change, let's say let's say ukifika a certain point, they lower your commissions, they lower your spreads. So just not a fixed spread, not a fixed commission. Like,
exactly.
You can negotiate with your broker. Like, are you using a broker who you can talk to?
Exactly.
Ama ni broker mwingine yako huko sijui Panama. See, you need to get to a broker mwenye at least if things go bad, you can walk into the office, talk to someone there and negotiate something. Exactly. So as Ken is saying, getting also a good broker in trading is very important, because most of us start trading and we don't really keep a focus on those transactional costs, swaps, commissions, the overnight rates, the spillage. So there's so much that can happen if you don't research.
Spillage,
if you don't research on your
slippage.
If you don't research on your broker well, utapata broker mwingine actually
sijui ingine inaitwa spillage. Sasa ndio ulize.
Slippage.
I mean, exactly. So like, do good research on your broker. And as Ken saying, we've recommended a broker, and I think it's currently the best. We have about 6 brokers right now in Kenya.
Figure 6.
Yeah, there are 6 now.
Business is
moving
booming.
fast.
Business is booming, my friend.
The license for trading just came like in 2017. And in 4 years we have 6 brokers.
Yeah, that's a lot.
It shows the market is growing. And in these 6 brokers, I can only give Pepperstone as
number one choice.
As my number one choice. So I think we've done the homework for you.
Yep.
We've looked at all these brokers and we know which is the best. So they getting to form a relationship with a broker. A long-term relationship also is very important.
Yep.
Because they'll see brokers see your trading. They know Ken may blow, Ken may improve, Ken may work exactly. So your broker will really, really help you moving forward in your trading, even as a pro.
Yep.
Because they'll recommend you to other investors.
Yeah, of course.
Yeah. So choosing a broker is very, very paramount in trading. But we want to just action. Jali umeweka broker gani. And I think also just from data, most of us try and use brokers from abroad.
Yeah.
See,
we don't even believe in the local brokers. And I
Yes,
feel like
yes.
it's because we don't understand that the local broker
From
is an
abroad.
intermediary of the foreign broker.
Exactly.
Hakuna Kenyan made
Hakuna
broker.
Kenyan made.
broker,
Ana
exactly.
access to exchange.
Yeah, of course. Too young.
So
Too small.
it's very important to choose the right broker. That's a paramount point. Yeah.
Okay. You're going to say something? My next point. Traders are afraid to lose.
And not traders only. You're not afraid to lose as a human being.
That's what I was going to. Everyone is afraid to lose.
It's
Like
human nature.
it's human nature, and it was the school even made it worse.
Yeah, hapo na English.
It's true. The school made it worse by punishing you for losing. I'm not saying say Ken.
It's true.
Look, even the way we are just
But we can't also reward people who are not.
we can't reward losers.
Exactly. You can't reward a loser.
Yeah, maybe
What
I'm
will
not
you be
saying
promoting?
you can't reward the loser. You
but
can
can
work
give
with the
them hope.
loser. Yeah, you
Punish
can
them.
work with the loser, not and make them understand that it's normal to lose.
Okay.
Even the winners, the people who are normally number one, struggle with the losing. Kwanza wale wako chini na wamezoea hata kuluza. Hao ndo wana shida sasa. Kina mimi, I didn't have a problem. I'm not saying that losing is a good thing. You just accept it. Don't tolerate it. Don't tolerate it. Work on it. But anyway, back to trading. People are afraid to lose, and mainly why they're afraid to lose is because they're afraid of being wrong. So the next trade you're afraid to take it because you and this is another thing, that the importance of back testing, like something we mentioned and we teach in class. Back testing will give you the consecutive number of winners and losses. There's winning streak and losing streak. So if you look at the back test, you can get a 5 losing streak and maybe a 5 winning streak, maybe. So whenever you can get into a streak of losing, you can have 5 trades ikifuatana as losses, okay? And if you get into a winner, 5 of them are winners. But now people forget to look at the profit factor also. Your average risk reward is 1:5. You lose 5 trades, you've lost 1%, 1%, 1%. You're down 5%. The next trade you take, you're up 5%. So go break even with 6 trades.
Yeah.
If you take another 1 trade and you're still risking your 1% and it becomes a winner, you're up 5%. Yeah. So if you have that, backtesting is really important. It gives you that confidence of approaching the markets with your system. Like the way you're saying markets, zinaweza kuwa random, you'll have random results. But now look, someone who's not backtested, the random results he's seeing is consecutive 5 losses. I do the 6th one can be a winner. But if you've backtested, you're not even afraid. Even if you're reducing your position sizing, you're knowing kuna streak itakam, you'll start winning. And they come, especially if you're long-term thinker and you can see the big picture. It will come, and you're okay with losses. Long time, I used to struggle with losses. You get a loss, EV, next trade in a come, I can't trade it. After you blow an account, you also it gets into your mind, opening a new account.
What's that element called?
What element?
It's called neuroticism.
For which one exactly? I've said a lot of things.
What you're describing, like you lose, then now the emotions take over. Because basically it's the emotion which takes over the logical framework. That's why you're told, put your emotions at bay, like put them aside when you're trading. Because when you start trading and you lose, now the neurotic feature in you comes back in. So your neuroticism is basically how prone you are to experiencing sadness, negative emotions, anxiety.
Negative emotion.
Exactly. And the more neurotic you are, the more likely you are when you do one mistake, you catapult it into all other things in your life.
So highly neurotic people, the depressed ones.
Exactly. They're the depressed ones. They're the ones who, not really, but they're more likely to be depressed. They're more likely to experience. And women are generally more neurotic. Than men. Yeah, so that's why you'll find that the men will be saying, udema kuna emotions mingi. But new element, yeah,
Neuroticism.
yeah. So when you come to the markets now, that's what really plays out. So for me, that's been
Is that
very
why
helpful.
also, is it sort of something that adds up that why we're in it's a very male dominated industry?
I wouldn't say that. I wouldn't say that. I wouldn't back that up to that.
Yeah.
I'm not really certain. I don't have the data on that to
Okay.
conclude that. But I do feel like if you can be able to recognize that feature and realize that the minute I start losing, obviously losing, it will get to no point in your life, in your trading career, where losing will be celebrated. That's not how your brain is wired.
Yes, pop bottles I lost.
Exactly. Like, that's not how your brain is wired. Anytime you lose, you'll tend to go into those places where your confidence goes down and such things. But now having the awareness that such things will happen is likely to help you overcome them. Having the awareness and accepting. Like knowing that I've lost and some negative emotion is coming in, but just being aware that this is an emotion which will just last for a very short time. You know, that's a good thing about an emotion. The shelf life is very, very low. So
very low.
Very, very low. The minute you may lose, at that moment, you feel like you don't even want to close that position. But after you just close it, take a stroll, come back. It's
breathe
gone.
in, breathe out. It's gone.
It's gone. Especially if your risk management was well. Yeah. So if you realize that it's easier for you now, if you combine that with what you're saying, the confidence in your back test, it's easier now for you to like
approach the markets, take the next trade without
in a very rational way. Because there are two things which happen. Your system can be in sync with markets, working very well, you're making money, and your system could go out of sync with the markets. That's when you're losing money. But you could go out of sync with your system. That's dangerous. And that's a psychological problem. You find that your system is telling you go short. You're not even in the trade. It says go short. Maybe you've gone long.
Your biases.
You're trading your opinions.
Yeah.
Now, the system sasa umeyeka kando. Now it's emotions which have taken over.
Which is not a good thing.
A very dangerous thing.
Another reason why most traders fail.
Exactly. It's the emotional side of people. Like, it's hard. Like, there was a research done by Amos and his friend, and they were basically...
Amos?
Yeah, so Amos and Dr. Daniel Kahneman, both of them psychology professors.
No, they were saying Amos. It's like you know him, but okay, yeah.
So they were basically trying to understand, like, how do people make decisions when faced with uncertainty and risk?
Yeah, bet.
Exactly. When you put people in situations where there is uncertainty and risk, how will they make decisions? Unfortunately, we all lean to emotions. We don't make any rational decisions. We'll take a sure gain over a probable, a sure gain over a higher probable expected return, and we'll take a...
Oh yeah, I've seen that here.
Exactly.
You talked about... No, the other one, the opposite.
Like the opposite.
For the loss.
Exactly. You'll gamble with a loss.
Instead of taking a sure loss.
Exactly.
Okay.
Instead of knowing, let me take a sure loss here, because the gamble means I could even lose more. So you'll gamble with a loss, but you can't gamble with a win. That's basically why people will cut winners short and ride losers.
Gambling with the loser.
Exactly. You're just gambling with the loser.
Instead of doing the opposite.
The minute you just train yourself to, when a trade is not working, cut it. Not interfering with it, obviously. But if there's one thing I'm good at nowadays is that.
Cut loss.
Cut trade I works.
Get out. Stop fighting.
I just know there's a trade coming and Nico out. Like, I don't even think about
it. Especially that abundance mindset.
Exactly.
That the market is an arena full of opportunities. And it is. It's just that in the heat of the moment you forget.
Exactly.
You say, hey, this was the best trade. It's gone against me.
So it's just that element of understanding. When the market conditions, like for me, I feel like that's one thing that I'm really trying to understand. Like the perfect market conditions for your system and for your mind to be in tune with the markets. Like when you're trading well and when you're trading poorly, just understand those things, because markets will keep on repeating. If that's the only way you can also be consistent. If there are no repetitive patterns with an edge, you would never ever make money in the markets. But since there are such patterns which exist, your job is to now know, okay, these are the patterns which make me money, these are the patterns which make me lose money, and you just focus on the ones which make you money, and you do away with these others. And that's another thing that I think I can go to. I don't know if you're done with your point.
Yeah, the one for losing. You even added on it, yeah.
The main reason why many people lose is they end up taking trades which they hope will work instead of trades which they know will work. And that's the desire for action, like you're saying. So you've analyzed markets, hauna trade, but inasonga. So una feel like you should participate. So now you start forcing issues. You've not back tested, or you've back tested a very good system, but now you start implementing it on other pairs, other markets, other time frames. Like you just start tinkering with the system. Tinkering.
And as you say, like markets are here to fool you.
Exactly. So
Most of the time.
Because they'll give you a perfect signal.
Perfect.
Hii inafanana na ile ya jana.
Yeah.
And so,
Na jana iliwak.
so you end up like screwing yourself because you just don't know which trade will work. And for most people now, I think that's the evolution of a trader. Like for me, that has really been messing me up. And all of the things that I've realized is the rationalization behind this is sini 0.5, sini 1%. Like it's just a tiny percentage of my account.
It's
It's a
dangerous.
small one. But if you think about that small 1, in the long run distribution of outcomes, you're really messing up yourself. You'll find that maybe in a year you'll have delivered 60%, but now you have delivered 30%. You're still up, yes, but your performance would be way better.
If you avoided
Exactly.
those hopeful trades.
Exactly. Like you're just analyzing, you didn't even see a good trade should fit all conditions.
Or the bottom trades also. I'm going to
bottom.
say the bottom trades. You've not had trades in weeks.
Na hii wiki mbili sijaona setup. Lakini unajua lazima nitafute. So you just start looking for trades. That need for action is like we were chatting with Gitosh jana alikuwa anatuambia venye. I was asking him, hit rate yako in 65. Your hit rate is very, very high. How comes? Because I've observed in your track record, you don't trade often. Like you trade once. And he told me, Ken, mimi natafutanga ile antelope imevunjika mguu. Si antelope peke yake. Ile antelope lame. Ile the one I'm certain yani nikianza kukimbiza kama cheetah, labda cheetah sasa ivunjike mguu. That was the analogy he used. Like that really made me realize like he only
He's very
risks
selective.
money. Exactly. He'll only put money at risk when all
Almost
conditions are met. Like you never put money somewhere where you hope something will happen. The minute you can have idea, I don't, like you're gone. That's it.
And that's tough. Waiting
Even
for
waiting.
a cheetah to wait for a broken the weak one.
Bas.
Na inaona hizo zingine tu.
Inapita tu.
Fatter ones, big
Ingine iko
ones.
wapi? The lame one.
Yeah, that's tough. It's
Exactly.
tough.
So training
Mentally
yourself
tough.
to wait like that. That's the real acumen of trading, because that thing is
Which is
hard
and boring.
and boring.
And very boring.
That's another thing. It's boring.
It's boring.
But I can assure you, the minute you become good at that waiting, and you combine that, because like I was looking at it and thinking, like if you're taking 0.5 risk and you take many trades, many subpart trades, yes, you may still make some money, but very low returns. But if you can be able to wait for those perfect opportunities which have met all your conditions, and you risk money on them, even if you go up to 1.5% per trade, trust me, you'll make a fortune in trading.
Yeah.
Because you'll have a good hit rate, and because you have a good hit rate, you have the confidence to risk more on a trade.
And with the calculation I just did with my students on backtesting, like so you're saying Gitosh hit rate is 65.
Yeah.
So I was doing the one with 70. If you're taking 40 trades in a month and you risk 1% a trade, and I've said how many trades? 40.
Yeah.
And you have a hit rate of 70. You know what percent risk reward you need in order to make 10%? One is to 0.78.
Very little.
The losses are higher than the winners. Not that very little, it's opposite because of a very high hit rate and you're making 10%. Yeah. If you have a hit rate of 1:1, you're up already 16%. Yeah, you take 40 trades. If you take 40 trades, 70%, you're losing 12, winning 28. If you take 1:1, you lose 12%, you win 28%. If you minus them, it's 16. Yeah. Imagine.
Exactly.
So hit rate is
very, very crucial.
Very, very crucial.
And that's one thing that for me I learned from Van Tap. Like in the book Position Sizing, like he keeps repeating, like if you want to position size well, if you want to increase your risk, my friend, just work on your system quality number. Just work on that thing, because it's way easier for you to make money when you know you're right 6 times out of 10 than someone who knows he's right 3 out of 10 times. When you're right 3 out of 10 times, after you're the third, these are the 3 winners in ngumu.
It's tough
Because you don't know which trade will win, which one won't win.
for sure.
So it's a tough endeavor, and how many people don't really go into it. And combining that, I'd come to money management. We're out here all focused on systems, markets, movements, but we forgot the most important element of trading is how much money you make when you're right, how much money you lose when you're wrong. That's the most important thing. Even for the guy now with a hit rate of 30, once you understand that element, you have a fortune again. Because many of us, when you start out in trading, even the pros, we're just focused on the direction of the market, on the direction of a setup. We've not really come up with a good, effective money management system that allows you to bet more when you're winning and cut out when you're losing. And very few people, very few traders, it's a negligible percentage, really understand money management from a deep perspective. They know how to position size well. There are very few. Very few. The ones who know how to position size well, why some position sizing models don't work, why to use a certain position sizing model. We don't even have position sizing models for most people. Tell people to send you their plans. Utaona
that one.
Euro USD, I'll trade Euro, I'll trade this system. Position sizing, risk management, nothing. So that's one reason why many people don't really also, I feel make it in trading. Even the guys who now develop. You develop, you become good at trading, maybe your hit rate is good, but still the aspect of risking what percentage to make what percent becomes a hassle for you. So you end up never making any good money in markets, because generally you're just not risking any good money in the market.
For me, I think my next point will go into I think this is for most beginners, people who are starting out in trading. And what is your focus? Most people start out trading when their focus is to make money. And that is the most disastrous way of coming into the markets.
Yeah.
You need to come into the markets with a framework. And I think this needs to be told to every new trader.
Tell them now.
When you come into the markets, your goal should never, ever be to make money in the first 2 to 3 years. It's developing a skill.
That is tough to
understanding
hear.
markets.
Yes.
That is
Develop
tough to
the
hear.
skill. You see? And forget about the money. Hata ukiamkanga asubuhi, when you wake up in the morning and you want to go to a hustle, let's say you want to open a shop, wines and spirit, delivery something, you wake up and how much can I make today? Forget about that. Don't even focus on how much you'll make, because you don't even have that money to put in that account. So just focus on developing the skill.
Yep.
Focus on what Ken is saying. Learn about position sizing, learn about money management. But now the problem is the 99% of people come to the market
with the aim of making money.
In the aim of making money. The money is there, yes. Hatujakata iko.
Capital iko.
Pesa iko in markets. Mingi sana. But as a new trader, just forget about the money.
So they should have the mindset like a fresher. Fresher akiingia union ajua things you do.
One goes to medicine school that, hey, I'm here because I want to make a fortune.
They'll do that 4 years later, 5 years.
So you go to that engineering school. Utakuwa hired uko in your 7th year in
True.
that experience. So focus on developing that skill. And I think that is now where I think I'll put now the point of leverage. Most new traders don't even like easy leverage zetu. The maana they use just Forex.
The loan.
Ukiambia Pepperstone iko na 400, anataka ile ya 2000.
Action. An amplify action sasa.
Anasema hizi brokers za Kenya zinanga good leverage. Anataka ile
ina 400 yo bado imtoshi.
Na vile ni mingi bana.
It's a lot. That's what I'm saying.
So, the main goal of this person is not about skill. How will I put $50 and make it into $200? Which is a wrong framework, and that is a surest way to not win in markets.
Yep.
Because one, you can be lucky and make that money.
You're luck.
Yeah. But longevity in the markets, you'll still come to that point why you fail. And because your main goal was, ulisikia sijui your friends make money here. You saw Ken is in that business. He's living well. maybe inamlipa. So me if I get into it,
Ajui Ken amepitia miaka
ajui
ngapi.
vitu ngapi Ken amepitia.
Mkula lami.
Exactly, like just focus
Kalia
on
lami.
not
Kalia lami.
Forget about the money. That's my main point. Yani there's that money which will come, but just forget it as a newbie, which is hard. You see, how will you go into like a career which preaches like it's a money making career, you see, but you start it with not having that money mentality. It's
and the
like,
skill.
psychologically like it's like in a counter
Logic, I don't
in
know.
a counter logic manze, like sasa hii stuff ni ya kumake do, lakini focus yangu si kumake do, you see, like it's like you're trying to open a wines and spirit.
Kwani uko na idea wines and spirit? Umeinsist.
Your main focus will be profits and losses in your first month of business.
For sure.
At least because, you know, if you like most businesses zazinanga hizo time ya your down curve. Trading, you have to like force yourself to go into that down curve. Actually, get into the markets with $1,000 and be willing. I'm coming with $1,000 and I'm almost sure if it doesn't work, I lose this $1,000. But most people, Taras, nikiweka $1,000 naweza unda ngapi? Hata ulizangi hii $1,000 inaweza potea kweli? Which is the most surest. Yani it's almost certain you'll lose it. Hata profits ni unaoneanga ikujanga ikipotea kidogo. So yani we have a wrong framework of how we get into the markets, and it totally destroys your career. Yep. Because ulingia into the markets with a wrong goal. Ulingia to make money, not to be skillful. So unapata tu kumake money yenyewe inakuchenga. So
that's a good point. You entered to make money, not to be skillful.
Yeah. So you get into the next business which will make you money. That's why you choose to sell mtumba.
And it's funny, but I actually wanted to say what you normally, because Lau is the one who takes people through risk management. How many people come to your class and they don't know how to position size?
100%.
All of them. Like seriously, it's a serious problem. Like someone assumes position size, and some of these things you just go into your broker and look at some of the tools that they offer. If your broker is legit, anafaa kuoffer kitu inaitwa position sizing calculator.
True.
Knowing that if I want to risk $10, how much position size should I take? What lots should I be trading? What contracts should I be trading? And then you can decide, okay, if I want to risk $100 on the euro and it's now trading here, my stop loss is here. Yeah. Okay, this is my stop loss. Like it's a tool which you use.
Because also in position sizing, there's no one way. Position sizing in gold is different from Dow and
exactly.
from euro. You see,
different.
So if you don't know all this, just use a broker which will, if you put there
help
euro,
you
exactly, it'll calculate in terms of how euro is calculated.
Yep.
And Pepperstone have be different. Pepperstone have that because actually it's very difficult. And I think in terms of position sizing, as Ken said, history different assets being position sized differently it's hectic to people.
Kama mimi mwenyewe inanichenga.
It's very
so
hectic
you remember
to people.
I've executed a trade.
Position size, right?
Imeanza with a very small lot. Like I know my lots now should start, maybe I'll start $30 down, 40. But you're starting
$3.
Because $3 down, I'm wrong. So if I know, if for me it's challenging, and I've been in the markets for a very long time, I can imagine for the new person who does not even know what a contract is. Like ameonyeshwa tu chart ya euro akaambiwa ikifika hapa unauza, ikifika hapa unanunua, like textbook trades which don't work by the way. So if you're trying to trade that way, just look for the smart trader tools on Pepperstone, log in that position sizing calculator, put in how much money you want to risk, it'll give you the lot size, and then execute that trade on your MT4.
And I was doing that calculation with the student I had yesterday. You know, if you have $100 account, you want to risk 1% and you're risking only 20 pips. Position sizing iwezi work.
You need 0.0001.
Exactly. Iwezi. And people will just iwezi. The 0.1 the 0.01 if you take it the minimum, at least 10%.
So to be precise, you should never ever start trading without $100. Exactly. $1,000 plus.
Yeah.
For starting, I think and also Pepperstone have a very, very good first deposit, $200. I think that's reasonable for a beginner.
Yeah.
For a beginner, you don't need to risk your $1,000. You need to
Itaenda.
Guaranteed.
You want to learn some like you just want to put your psychology at test. So even if it's $200, your psychology is at test.
Yeah,
And
for
that's
sure.
the most important thing.
Because
Get into markets.
see,
But
there's a
imagine,
friend
you
of ours
can't.
who deposited $50. That trade, ali withdraw tena tu pole pole.
But it's best. It's good he did. Yeah, $50.
I know you'd rather use $50. At least get the excitement, learn when you're trading in our work. Yeah, simba.
Hata ekelea hiyo 10%.
Acha ipotee kwanza, uelewe.
Yeah, alikuwa very afraid.
Isikuwe
He's
risk
afraid
averse
to lose.
pia.
So I think that my point was people fail because they come into the markets with a wrong framework of how this industry works.
For sure.
Because it's being preached out here. Trading is about making money. See, is that sinivo? You market as a way to make money.
Yeah.
That's a jamaa
And it's truly a way to make money.
Yeah.
Like all fortunes have been built in the stock market.
True.
Man. Many fortunes have been
before you
built.
get to make that fortune, bro.
Where is Elon Musk now?
At sijui, ame
I
lose
think yeah,
weight like
he's been dropping. He dropped
After ile tweet yake on weekend. The one for selling is
he lost about 30 billion in one day.
the one he used to sell.
But I think it's just to move out of the topic kidogo to get into that Elon Musk story. I think there's a reason
As we finish off.
yeah, there's a reason behind it, because I think he has some debts he has to clear off, so he decided to just
Richest man has debts.
bana.
No joke.
lazima iko bana.
Muhimu bana. Popo unajitetea sila deni. Tafuta deni bana.
Exactly. Yeah, so he wanted to clear some debts, so
The tons of billions.
of course yeah, in billions. I think actually it was about tax and stuff. Yeah, like he has some tax bills to pay, so that's why he did that. Also, before he did that, his brother Kendall Musk sold $150 million worth of Tesla shares. So it helped when the news came out. The next day now, because the next day is when the market dropped about 12%. It also helped spiral, like, hey, why is the brother selling stock? See, so maybe sellers now decided coming in, because Tesla is have a 12% drop in so long.
Yeah, very long.
In a very while. So that was just
But this guy's down 30 billion and he's still number one.
yeah.
Hata 50.
Even if he loses half of it, he's still
sawa.
at 180. Oh, sorry, 160. So ako top 3 bado.
Hilo ni tajiri bro. Sasa umse ako kina Rockefeller, those standards sasa.
Yeah.
Anyway, another thing that I think I wanted to point out as we clear out is also I feel like many people don't really make it to the Canaan land, because trading requires you work on yourself. And working on yourself, looking yourself in the mirror, knowing your mistakes, knowing yourself
With a
is
dirty
hard
shirt.
thing.
Unajiangalia na mirror with a dirty shirt, torn trouser. Hey, Taras, is this how I want to look like?
Exactly. Like just looking yourself square. There are very few people who are in a position or in a career where they're forced to look at themselves daily.
Like trading.
Exactly. Trading puts you at a test that I don't know. I feel like athletes are the only ones who'll understand.
Yeah, what you're talking about.
Yeah, because it puts you like you're this indisciplined. Like, Ajua, you can be indisciplined, but you have not faced the fact that you're indisciplined. In that, you're indisciplined, but it's not really interfering with your life so much. Like, you're indisciplined, like, you're losing maybe, let's say, 20%. If you are disciplined, maybe you'd be at 100. But
For
now,
sure.
you're working at 70% efficiency. Now in trading, the minute you're just indisciplined by 30, it cuts off your trading by almost 60. So you're forced to like look yourself in the mirror and like just ask yourself, am I this? Like, is it so hard to just follow rules? Am I this emotional? I have all this baggage in my head. Like, those things are hard. And the minute you're put at a test to do some of these things, like to just know yourself to that point, many people decide, acha tu ikae. Like, I don't want to work on myself. And that's why a guy like Ed Sokota said, everyone gets what they want out of life. Some people seem to like losing, and therefore they win by losing. You've gotten. Like, everyone gets what
They want.
out of life. So some people just like losing, and they win by losing. Like, you've gotten what you wanted. Like, you just like it. And now you win by losing. So by the end of the day, you're winning a lot, but by losing. Because if you look into habits like self-sabotage, like many people sabotage themselves, but they're not forced to like check it. In trading, the minute you sabotage yourself, it's
Immediate feedback.
It's in black and white, like ona
Work on this.
ulianza kuwin ukaanza ujinga mingi, ona ndo hii black and white, you get. So that element of like looking at yourself every day and examining your mind and looking at your psychological framework and trying to work on yourself to get to that level where you don't have mental baggage. That's why many people just say cheka kama kuna hii kazi mob ya kuangalia my past my acha ishie hapo. So I feel like that's one major reason why, because developing awareness is hard. Developing awareness and acting on that awareness is even harder. So you just give up at that cycle of like, hey, I really have to look at myself like this, I really have to go through this journey. Just like, no, I'll just leave it at this. So I won't really work on my psychological side. I'll try and waste time working on these other things, which won't really work in the long term. Because by the end of the day, you must. Because like I was looking at some of the books written by Van Tapp. Like some of the tasks there, machine kufanya. Also, may have not done them because they are hard things. Like you're told to examine some of your beliefs in these certain facets of life. Examine your relationship with these certain things. Those things are hard. And I was thinking about it. We just kind of try and avoid them. But in real sense, or we assume them, in real sense, it's like we don't want to like go to that point where you're put to a test to think about some certain things. So you just prefer, let me act out my dramas. Things unfold the way they'll unfold. But by the end of the day, if you just check it, you'll realize that you need to go back and do some of those tasks. Work on your psychology for your trading to be top notch. That's the only way you'll do that. And journaling is hard. Like Tosha alikuwa anatuambia hiyo stuff. Alikuwa anatuambia it took him so long to realize that journaling was the secret. Like realizing that I took this trade, I took it at this time. This was the reason I took it. Because if you don't do that journaling, we assume we are self-aware, but we are not.
Yeah,
self-aware.
you're really not. For sure.
So you'll come back after some time and you're really trying to remember, why did I do certain things? And you don't. But if you just keep a journal and you come back and you check it out and you look at some of the things you did, you'll be amazed. Because like in the psychology class, I give people a very good framework of journaling your mental states, journaling the trading habits, the daily report card. People ask me, you do all this?
It's a lot.
Hey, you do all this? I look at them and tell them, you ndo hard work ya trading sasa. Uko kutrade ni rahisi. You know hard work.
Kufanya tu buy na sell.
You ni buy, sell. You see hard work. This is the hard work. Hey, kitu si rahisi. So you see like someone is really struggling to come to terms with the fact that they have to sit down and examine their mental states on a day-to-day basis. Like they just don't want it. They don't want to look themselves in the mirror and say, today, this and this caused me to go into a certain mood. This and this caused me. Like you just don't want to know. So you avoid such things. And I think that's one reason why many people would ultimately get to Canaan. Canaan is the land of milk and honey. Where would you ukifika huko kwa trade?
I insist. So you want to go to Canaan? Taras wants some wine and spirits.
Wait, you do want honey and milk?
One peace of mind.
Yeah.
But anyway, I feel like those are some of the reasons why.
But I think just to summarize, now let's put like what is the main reason?
Number one.
Lack of education. Let's start.
Not even that. Me, I don't believe it. Like, also, we should develop kiasi. Why do even pros fail? Who pro on your education?
Oh, unasema like, what is the main reason why many people fail?
Yeah.
Tell us.
Psychology.
I also may say that. Not understanding themselves.
Psychology.
Yeah.
Like, markets can easily depress you. Markets can easily excite you.
Yep.
The moment bado you're not solid mentally, it's so hard for you to be indisciplined. Even not work on yourself.
Yep.
The moment you're working on yourself, you're disciplined. Even when you're indisciplined, you know how to work towards that.
Exactly. You can even catch yourself falling into indiscipline. Yeah.
So it's majorly a psychological problem. I think that trading in a psychology class.
Seriously. Because if you
Mostly 90%.
Because all those problems you've said, the root cause is lack of a good psychological framework. You take trades because you want action. Okay. Or you understand you don't need action to make money. you over position size because you're greedy. Okay, I would understand you make money in the long run distribution of outcomes.
Okay.
You're in a loss, you don't want to cut that loss. Okay, you've not understood as a human being. As a human being, you're risk aversive. You don't want to cut losses. So 99.99% of the problems is psychological. And that's why like someone like me, I spend like 85% of my time just going through philosophy, psychology. I just want to go deep on the subject. I do believe like if you understand certain things well,
You'll be better off.
you'll be better off. The minute tu psychology yako tu iko intact, hizi zingine ni rahisi. Backtest ni rahisi bana, si ngumu. Hata nikishare backtest yangu na wewe itakusaidia. Because it's just going through those charts, looking at the patterns which worked, why they worked, how to buy the signals, the levels, and those things will come back. But hapa
And the gym, yagitosh.
So it's very painful, and of course we humans want to avoid pain.
And
Who
then
wake
there's
up every
pain.
day akiambiwa wewe join in disciplined. Fuck this guy. I'm going to do some other things. So it's all about just understand trading will any night haitaikuwa easy huku juu. Hata we develop aje.
Hata kwa pro.
Any always a student of the markets.
A student of yourself.
Market inakam bro inakutempt so much. Hii ni ile setup bana. So
Take
kumbe I miss one criteria. Unasema wala si ni 0.5 tu.
Bas.
So it's
Going
majorly
against that is tough. It takes time.
But
It
if
takes
you-
time.
if
That
you-
takes
And also
time.
not that we are actually perfect. We
Yeah,
do these
we're
mistakes.
working
We
on
do these
it.
mistakes. Yeah. So trading,
Goodly si tuna lose hizo 0 point. Kuna watu tu hii.
ule jamaa wa leverage
2000.
you know that thing is serious. Like me nime ask some people like why not using a Kenyan broker? Ati hii leverage ni kidogo sana.
I want to leverage it. Okay.
You see one and that point that tujasema undercapitalization. So to counter undercapitalization, I wanasema see they can give me virtual money. Then nikika $100 naweza trade gani kuna 10,000 bana. Unaweka $100 thinking hii leverage itakusaidia. But it's the suicide to your career.
Yep.
So hata inafaa there's someone who says don't even use leverage as a new trader. Eka 1:1. In that position yani hata ni one position tu na ni ile 0.001. So the fact that you want to put leverage so that you have many trades, many pairs, higher position sizes na system uja backtest system hata ujui how to be confident around it, it will be very very difficult because also the moment you develop all these things you become confident, your psychology is perfect. It's so easy now for you to maximize on your skill. You can even take huge risks like our friend Mike Gitosh. The other day he told me he takes 15% risk per trade. But hiyo ni only yani ndafika hiyo point bro alikuwa anajua yani hii ni ile anasema hii ni ile antelope bana. So so confidence ina come and that's how you make money in trading.
Sure.
Confidence is a state of mind. But then
That's
now,
his theory.
to just clear up, like we've said, the main reason why many people fail is lack of a good psychological framework, or you can name it as lack of not understanding yourself. You can put it in very many names. How do you, on a day-to-day basis, so this is just a question to all of us to wrap it up, how do you on a day-to-day basis ensure, or what techniques are you using to ensure you develop yourself psychologically? Like what are you doing?
One for me is in terms of how I take risks. So I don't take risks which will paralyze me, which will paralyze me psychologically.
Okay.
Because like yes I can accept a loss, but to what extent of a loss?
Exactly.
So the moment kwanza niko na big loss hata hiyo
The
trade
exposure.
hiyo exposure siwezi yani already to hiyo trade yani psychologically I'm not sweet. So I take trades which at least I have the risk comfort.
Okay.
So at least it helps me stay in the psychological framework. Even if you lose 2-3%, and you still not any see 30% tena. You say 30% coming back from that is impossible. But coming down from a 3-4% is very very easy.
Yeah.
So the moment you're taking risks which allow your mental state to be sober is very very okay. The moment, because also there's revenge trading.
Yeah.
Which
There
is
are
a part
many
of
elements,
psychology.
yeah.
So the moment you lose 10%, the urge to recover that is way more than ule mtanda ku recover 3%. So at least I trade like I try and intertwine my psychology and my risk. In that najua if I risk more psychology yangu haitakuwa fiti. So at least na counter na taking smaller risks until I get to a point that you create your confidence. Now I can increase the risks pole. That is one point.
Yeah, man. Also similar. Another one is having few pairs to trade. So I'm not psychologically rather mentally exhausting my mind. So I have very few pairs, so I won't look at many things. So I'm not, if you look at many things, you'll see many opportunities and you'll take those many trades, those many high exposure Taras is talking about. So that's one thing I want to avoid so that I don't exhaust my mind. Two, I'll also risk less. Like Jana, the market stand. I was in profit about 1,000, then you're back to 500, the way you're saying. Hey, bro, if you're at 5,000, then you're down 4,000, with high risk. I'm backing up what you're saying. Your psychology, you'll just like I'd close all my other trades. You say, let me come out. So let me stay out. So having few pairs also helps me have few time on the chart, I think, which can really disturb you mentally, psychologically. Screen time. So yeah, that's a few points.
I think I can also add reading widely about psychology. Because psychology is wide, and like there's so much even apart from trading. Mental states, how they easily change. Unapata tu umekuwa like you are let's say not bipolar, but you can moods zina change so fast. You see, a trade kitan bana, you are at the confidence in the trade nishaenda. So I think also like learning so much about psychology from a wider perspective ina help sana about understanding that kumbe ni ile stuff nilisomauka about being highly neurotic, about being not confident in yourself. So also reading widely is a good way of working on your psychology. And of course, be in the markets, get beat, pigwa nyongolo.
And you can, what do you say?
For me, I'm currently doing journaling every day, so that's one thing that I'm really working on to understand my mental states. Reading is also very, very helpful. So some of the techniques I've gotten have come from reading. Like you just have to but one thing I also observed is you can have information, but if you don't do those exercises, it's hard to translate that information into something actionable. So after reading some of these techniques, you really have to apply them for them to work.
Yeah.
So that's also something else that I'm doing. So I have a lot of exercises that I do. Like there's this thing called creative visualization. So where you just expose yourself to, try to imagine difficult situations in the markets and then try to look at how you'd handle them. Like you're in a position, you're losing. You're in a position where you're tempted to take many trades. How would you handle them? So it's like pre-exposure. You're like putting yourself out there and trying to see some of the things that can happen and how you can handle them. But for me, I think primarily I'd just come back down to daily journaling. That's been helpful. Just transferring what's on my mind in a paper.
Basically, you put your mistakes and goods.
Exactly, on just paper, and then after 2 weeks, I just come and read that paper and I laugh. I'm like, this is what you do on a day-to-day basis. So that's helpful. Knowing what you're doing and then comparing that to where you want to go. So consistent journaling is one of the things that I think for me that's the main thing that I'd say will really help and is helping, and I'll keep on doing it. I can only imagine after doing it for 5 years. Yeah. So that's the only one that I think I'd come back to, besides now reading a lot and the creative visualization that I was saying. So those are the 3 ways that I use to manage myself.
That's great.
Cool. I'm done with my points, man.
Yeah, me too. So I think point is just never give up in the game. Yeah, never give up. Ni tough, but just never give up. Even if it takes you
10 years.
Yeah, just never give up.
It's rewarding.
Work on this. It's very, very rewarding. So hata kama huku discipline imekuwa ngumu nini, wake up, show up the next day to work. Open your machine and face the charts too.
And also that's another thing that I think also, just like you said, to just echo what he said. Keep trading, man.
Yeah, keep trading too.
You can't learn psychological frameworks without being in the market.
Exactly.
You need to just have an account in kutempt kuchukua your trade, uchukue kwanza lose 1%. Next time tena lose, next time lose. Then the third time you're like, no, I'm not taking that trade. I'm just waiting for that dead antelope. The one I know I'll kill. That's how you learn. So also being in the markets. You can't learn some of these things without being in the markets. You have to be in the markets. That's the only way.
So never give up, guys, and work on your psychology as you move forward. It's difficult, but very, very rewarding. I think the most rewarding career in the world. Yes.
The highest
that
calling
is-
of
That it
mankind.
is. So I think we'll wrap it up. It was a very, I'm not sure how long it is, but very interesting chat. We've given you guys a good broker to use, so make sure you're not being conned by your brokers with the slippages. So use a good broker, never give up, work on your system, work on your psychology, and most likely you'll have a chance, a ghost of a chance, as Caleb says, a ghost of a chance. In the game.
Also, if you have questions, like send them in questions. Like some topics we've done, it was people who are requesting.
Yeah.
So if you have questions on some of the things you think we can help you by tackling, share them with us. Email, you can write a comment up chini, you can look for our numbers on the website and text us. You can, like, there are very many ways you'd reach us out. I think our information is out there on all social media platforms. So if you can be able to reach out to us and tell us some of the things that are challenging you, we can try and come up with some good content that will help you. We believe like some of the things you've tackled here will be very, very helpful long term. So just think about them. Don't listen in and refuse to think, like Caleb likes to say, or like we concluded, information precedes knowledge, knowledge precedes wisdom. So ensure you understand how those things come about.
Yes. And finally, we have a 30% offer on all our products. So if you want to start learning how to trade, not how to make money, how to learn how to trade.
Black Friday.
We have a Black Friday offer, a good sale. This book goes for 1,050 bob right now. It's $1,500 on normal retail.
Yeah,
So you can take advantage.
Psychology
You
nuggets.
can take advantage of the Black Friday offer and start trading. So
Learning.
yeah.